Hi, and welcome again to another edition of Market Analysis for today, April 2nd, 2024. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is being pre-recorded about an hour before the U.S. sessions opens. All right, so nothing can stop the stock market rally, right? Well, investors were given an unwelcome reminder of something that can puncture their positivity: rising bond yields. The second quarter began with losses for the Dow Jones Industrial Average and the S&P 500 indices as Treasury yields jumped yesterday. That's not the end of the world. The S&P 500 began the year with a 3-day losing streak and still went on to rise more than 10% in the first quarter. But the reasons behind the quarter's sluggish start may be cause for concern. Federal Reserve Chairman Jerome Powell said Friday that the central bank doesn't need to be in a hurry to cut interest rates. The message seemed to hit home for markets, helped along by strong manufacturing data. Bond yields rose and the probability of a rate cut in June fell to 58%, down from 73% a month ago. To be sure, yields have risen this year and rate expectations have also been pushed back. But neither of those things has significantly impacted stocks, which have surged to record highs. However, the start to an April trading suggests rate expectations and the bond market could have a more significant role to play. Another factor for investors to watch is the performance of the so-called Magnificent Seven stocks. Tesla, which reports crucial delivery numbers Tuesday, and Apple have lagged behind the broader market in 2024. And more recently, the rest of the group, including Nvidia, has underperformed. On the one hand, that indicates broader market strength. On the other, it suggests the heavily weighted group may not be able to drag stocks higher in times of need. Now, of course, it could just be a blip, and economy strength may support another strong earnings season and a further leg higher for the rally. But investors should be increasingly wary of the bond market in the months ahead. Now, with that being said, let's take a look at what we can expect for market fluctuation today. So we have the NASDAQ in front of us. So the NASDAQ has been just flirting with 18,600 as a resistance level for it. Yesterday, it went towards there and then just retreated back, pulled back, and kind of flattish yesterday, and then flattish. But today, it's another story. It is trending lower. It has crossed the moving average. So I'm looking at 18,300. RSI, it is not, it's right in the middle of the analysis. So we have now the S&P 500, which also indicating lower movement. So let's see if around the 5240 can be that place for it to find some support. Then we have the Dow, which has fluctuated strongly to the downside. So let's see if that momentum of this push to the downside will take up to 39,400. So all three indices could be a sell in the morning. Now, crude oil is a bit different of a story. Crude oil was in this tight range of about $1 between 82 and 80.5. It did break out to the upside on Friday. So therefore, we have another green day yesterday. In technical analysis, if we have consecutive higher highs and higher lows, and higher highs, then that means that we are in an uptrend. So that uptrend is being supported, but the RSI is about to enter overbought territory. So keep that in mind that 86 could be that target initially. $90 at the end of the week. It isn't far-fetched. Then we have Nat Gas. That Nat Gas, it has obviously that demand, but it is seeming to have hit a ceiling right around 175. Now today is pulling back. Let's see if we can use the moving average as a dynamic support and for the market to come to it and then just rebound higher from here. Then we have gold. Gold, just like crude oil, it was in this tight range. It broke out to the upside, and we have had 1, 2, 3, and now 4 consecutive days of higher lows and higher highs. But so far today, we kind of created a double top. So can this be a moment for gold to say, I'm going to make a correction, do that correction, which basically that's what it's doing right now, and then continue higher. 2275 is the target if that's to happen. Now silver is also doing a nice breakout to the upside after just showing us the momentum to the upside, higher lows, higher highs. Okay, so let's see if at least we'll come and meet the high that was created on March 21st. $26 is the round number, psychological resistance number for it. The RSI is not entering or bought. Now, copper, the demand of copper obviously is going to continue making it a good investment, good trade opportunity. We're also in this tight range, very just coughing up congestion, and then we broke up to the upside. So let's see if $4.10 can be the target for today. Now we have Bitcoin that also, as it created this ceiling right around 71,400-ish, it broke to the downside. Let's see if 64,000 would be that psychological support level for it, and then just rebound from here. Now the currencies, yesterday they had a bad day for the euro and the pound. They fluctuated lower. Today they seem to be holding their ground. The same token goes for the pound, but we'll see just how much the dollar index had opened up with a gap up today, has been closed. So let's see if it does continue to trend lower, right smack in the middle of it, will it find support and just trade higher? Let's see if that's the case for today. All right, have a great trading day. I will see you tomorrow.